This is episode 118 of the Steady Trade podcast with your host, the ever so polite Tim Bohen.
I don't want to be rude and ask your age.
Today, Tim sits down with Chris Irons of Quoth the Raven.
We are being conditioned to think that up is good, down is bad, when that's not the case. People need to learn that they can position themselves to make money when the markets go down, and people need to learn that in a real, true free market, markets go up and they also go down.
It's an entertaining and highly informative discussion that covers topics like this.
So it's got to be strange for them to be reporting on, hey, this company has a debt maturity coming up when they don't really understand what that means. You can just see the blank expression on some of their faces.
And this.
And trust me, there's some dildo on right now going, oh, buy Home Depot, right? Nope. I guarantee you, if I went and read Home Depot's annual report cover to cover, I'd probably be 6 times more informed than that guy by the end of the report.
And this.
If you get yourself informed and you get a little bit of an education on how to do a little bit of research into things, just know that you are as good as anybody that's out there.
That's right. It's another great episode of Steady Trade. Right, Tim?
Welcome back to the Steady Trade podcast. Got an awesome guest today. One of the sharpest guys I've ever talked to in trading and really more of investing. So today we've got Chris Irons, aka QTR Research, or Quoth the Raven. I'm guessing it's a reference to Edgar Allan Poe. But Chris is got a crazy story. I think it would be a very inspirational story to you if you're starting day trading and you're 6 months in or a year in and you're like, man, I'm really struggling. Chris goes about his journey of, he uses some explicit language of just, failing and he tried everything. I mean, he tried, day trading, Forex, all this stuff. And then he's here 16 years later, one of the sharpest guys I've ever talked to. I mean, I think the journey is what makes him so smart and so interesting. Now, we talk a lot about being the master of your own domain. And I think that's the number one takeaway from this podcast is, man, Chris, there's a lot of songs that say this, but I mean, he did it his way for sure. I don't know if anybody else has taken the path he's taken, and he owns up to everything. He admits his mistakes. We talk about, I'm like, hey, would you do it the same way? And he's probably like, I kind of have to do it the same way, but he owns up to everything. He's not asking for any handouts. He's not asking for any help. He's that, that free thinker, that independent individual. And then we talk a little bit about bullish and bearish stance. Many of you know from listening to the podcast, I'm very, bullish. I talk about how I think the economy is booming. Stock market is raging. Chris is very, very skeptical, which is good. In the first couple lines of opening the podcast, I'm like, hey, this is what makes a market. Okay. Somebody thinks the stock's worth this. Somebody thinks it's worth that. That's why there's buyers and sellers. That's the great thing to me about the market is it's my wits against your wits, my opinion against your opinion. Now, one thing I do want to comment on is, one of the biggest differences that Chris and I have is he's very dubious of technical analysis. And if you're a longtime listener of the podcast, you know that we talk about technicals a lot. Now, I will say this, simple technicals, I'll tell you over and over again, don't send me a chart with 15 different indicators on it. But we talk about support, resistance, breakouts, breakdowns. And, Chris is a little more of that kind of fundamental, not more of, 100% more of the fundamental type trader where he's looking at the profit and loss, the balance sheet, the annual reports, all of that to make his trading decision. But I will say this, what we're doing here is, we're more short-term than he is. He's looking out, I didn't ask specific time frames, but I'm speculating. He's looking out months, years in a lot of his decisions. And, here at Steady Trade, we're mostly day trading. We're looking at minutes and hours. So it's a different mindset, and I respect his opinion that if he's looking at multi-month, multi-year positions, he doesn't care about the RSI or the VWAP and some of these indicators that we look at. So in summary, really happy with this episode. I back to that point of just, forge your own way. And I think that something I like to do on this podcast a lot is to encourage people to pursue their dreams. And if you really, really love day trading, it's not 2-month thing. It's not 3 months. It's not a year. It's probably not a few years. You might be like Chris, and it's 8 or 10 years before you catch your stride. So keep that in mind. And as always, be the master of your own domain. Hey everyone, Tim Bohen here. Really appreciate you listening to the Steady Trade podcast. I have a great time doing it, really giving back, and it's a true passion project of mine. But if you really want to get into the nitty-gritty of trading, in StocksToTrade Pro, it's a mentorship program that I do twice daily webinars every single day of the week. Never miss a day. Market open, market close. And I think it is the best way to really speed up that learning curve. And the best thing about it, and this is something that I'm truly, truly proud about, is we built an amazing community in StocksToTrade Pro. We have a chat room, traders in there all day long, new, intermediate, advanced, young, old. It is an amazing community, and I think by working in these twice daily webinars with the chat room, with the community, with StocksToTrade, it is one of the best ways to become that consistently profitable trader. So, as mentioned in the introduction, we have Chris Irons, also known as Quoth the Raven here. He's got a great podcast. Definitely check it out. We'll link it below, but you can also just Google QTR podcast and it will come up. Chris has been around. He's got a long history. Would kind of like to introduce him, let him give his bio, and then I'd like to pick his brain. We kind of, him and I are kind of on opposite ends of the spectrum, but that's why there's a market. There's always a.
That's right.
The reason it's a market is it's ultimately a big debate. So thanks for coming, Chris, and yeah, if you don't mind, kind of just jump in. I don't know much of your history, so I would like to kind of get to know. So.
Well, I'm stoked to be here. Thank you very much for inviting me on. I really appreciate it. So my history kind of is not really like an orthodox history. I don't really have a traditional finance background. I started kind of investigating the capital markets, which is a nice term for losing money, when I was 17, 18, and from about 18 to, I don't know, about 27, 28, I pretty much worked as a bartender. I had gone through university. I went to graduate school, and was more or less a casual investor. I was learning by pretty much just getting my balls punched in for the most part, just getting absolutely crushed. And that's how I learned. Which is
how most of us start. If
right.
I always like to make fun of the people that are just like instantly successful. It's like, wait a minute, man. It's like
I never stood a chance. I never stood a chance from the beginning. It was a full-fledged fucking 4-alarm disaster from the beginning. I think the first couple of stocks that I bought, outside of a couple of blue chips I bought when I was 18. I think the first couple stocks I bought were, just trash, over-the-counter, pure scams. I didn't have any idea what I was doing. I didn't know anything about due diligence. I didn't know equity valuation. I didn't know how a public company worked. I mean, I just didn't understand any of it at all. And
now, real quick, I don't want to be rude and ask your age, but when you were 18, kind of where are we here? I can't remember how old.
Sure, I'm 36 now.
Okay.
So
okay.
And yeah, that's pretty much how I learned equities, by getting my ass kicked. And then I wanted to learn options, so I kind of learned how options worked kind of in principle, but didn't really understand, the Greeks or any of the complex stuff involving options. So I got my ass kicked on options for a while, and then I was like, ooh, Forex, cool, you can trade 24 hours a day, and then got my ass kicked doing that too. Because why let the ball stomping stop at 5 p.m. or 4 p.m., right? If we can take it 24 hours.
At least 18 years ago, they didn't have crypto, so at least you didn't get suckered into crypto.
Right. Well, that's right. That Forex was really the only way to trade back then. I mean, unless you're going to trade futures, which eventually I did too, but poorly, very poorly. Not as successful as, say, Hillary Clinton trading cattle futures. But so regardless, I learned kind of by getting destroyed for about, 10 years. And then I finished graduate school. My undergraduate degree was in English and business and technical writing. So I didn't have a huge finance background, which actually I think now today works to my advantage.
Right.
I went to graduate school for a business program that wasn't super financial intensive either, which was, again, I think to my benefit, but that's when I first started to kind of get a look at, what a P&L was and what a cash flow statement was, what a balance sheet was, how equities were valued, things like that. It was really kind of in terms of actually getting my act together, it was somewhat of a late bloomer. I didn't really start to understand what was going on until I was probably, until maybe 10 years ago. And then I kind of kicked it into hyperdrive from there. I went to go, so I finished graduate school. I did a second graduate school program that helped hone me a little bit more. That was a little bit more geared towards finance, even though it wasn't a finance degree. Then I went to go work for a company as their investor relations director, which is a really baptism by fire in terms of understanding public companies. I took on a role that didn't really exist at the company. They wanted to it was a company that was an investor in at first, and I didn't like their IR. I thought they were doing a shitty job. And so I called the CEO one day and I was like, hey, I don't know what you're paying these guys, but I can do whatever they're doing better than them. Just show me how to do it and you won't have to show me again. So he did. He had me come up and interview, and he hired me. And then I worked for 2.5 years as an investor relations professional, which really sat me alongside of, our chief financial officer, our CEO, our COO, the administrative people that helped write all the filings, the SEC filings. So, our securities attorney. So I got a really hyper intensive, exposure to how the public markets worked.
How the sausage gets made, in essence,
Yeah, exactly. And that was really one of the, in terms of cultivating my experience level, that was very rigorous and very intense, because you're going from somebody that has a basic understanding of the capital markets to now having to be in a position where you're discussing everything. You're helping write the annual report. You're talking about different types of financing. You're talking about, you're talking about the debt markets. You're talking about, debt covenants. You're reading prospectuses. You're, putting together the annual general meeting. You're learning what goes in a proxy, all that kind of garbage. So I took a lot of that on at that job, and that was really like where I kind of sharpened my teeth. That's when I started writing for Quote the Raven, It was a couple years into that job, maybe 2012 this is, I don't remember. But I started writing under my moniker Quote the Raven, basically because I just wanted to write anonymously and make some extra money.
Okay.
I wasn't really concerned about becoming some type of fucking personality. So I just started to write, and if you go back and read my early stuff, it's garbage. It's pretty much just trash. And I left that job after the company didn't go under, but it ran out of money, which is very, very close to going under.
Sure.
And from there, I had been doing a ton of reading on Seeking Alpha, sharpening my skills a little bit more. And I read some short activist pieces by Muddy Waters had just done NQ Mobile, I think in 2013 or 2012.
Yep, I remember that one. I shorted NQ, actually, yep.
and Geo Investing had just done Longway Petroleum. And I had read the Longway Petroleum report and the NQ report, and I was really impressed by the level of due diligence. I actually, what I thought was, here's research that coincides with the level of detail that we're kind of being mindful of in making the sausage.
Yep.
most equity analysis, and even to this day, people on the sell side, they take management's word for it. They do some type of stupid discounted cash flow model where they fucking reverse engineer the numbers that they want. And that type of due diligence, what guys like Muddy Waters were doing with putting boots on the ground and, you know, reading the debt covenants and going the extra mile, was commensurate with what I thought was about as good as you can do legally, you know, without crossing the line into illegality. And as far as legal due diligence, that was probably the most like badass job that you could do. So when I left this company, I knew that I wanted to kind of do that type of research. And so when I got back to Philly, that was up near Canada. When I got back to Philly, I looked up the guys at Geo Investing because they happened to be local to me. And I just said, hey, you know, read the Long Way Petroleum Report. I thought it was great research. This is the kind of research I want to do. Here's what I'm bringing to the table. By then I had a, you know, pretty good understanding of what I was doing. Not great. Still don't have a great understanding of what I'm doing, but better. And they hired me when I came back to Philly. They were like, oh, we've read your stuff as Quote the Raven, so we know who you are. So I was like, oh, that was cool. That kind of expedited the process. And they were already following me on Twitter and stuff, I guess. So, yeah, then I went to go work for Geo Investing for 5 years. And there, you know, helped that company expose billions of dollars in U.S.-listed China-based fraud, and worked on, you know, probably hundreds of research reports and notes for our clients, you know, on the short side and also on the microcap kind of long side. And, you know, when I went to go work for Geo, I told them I just have to, as a condition of my employment, I need to be able to continue under Quote the Raven. And I don't want to kind of let this brand here that I've inadvertently kind of mistakenly developed go to waste. And they were cool with it. So, you know, I kept my Twitter account and everything. And then a couple years into that job, I started doing the podcast. And here we are, brother, you know, 18 years after age 18. And I got people like you calling me to do podcasts and interviews. I'm still kind of confused about, you know, I'm just kind of a regular guy.
Sure.
Yeah. So anyway, and I'm speaking at conferences and shit now. It's crazy. I don't know what people are, what people like, but it's just me being me, and I'm enjoying myself.
Well, I mean, you know, I'm obviously I'm a big follower of like the Gary Vaynerchuks and stuff like that. And I mean, it's like, it's amazing what you can accomplish by just showing up for years. You know, it's like, I mean, you're an 18-year overnight success. You know, it's like, you know, it's like everybody thinks it's like, oh, you know, I start a blog and next week I'll be successful.
Right.
No, it took you 18 years.
It was a grind, man. I got to tell you, it was a grind. And as I was doing it, here's the really nice thing, brother. The nice thing is, from the get-go, I knew that when I was going to make kind of a social media presence for myself, that one, I was going to be myself. So I didn't have any bullshit to remember. I wasn't putting on any kind of facade.
Yep.
You know what I mean? So that was the easy part. The other thing too is, you know, for me, having the blog and the Twitter and that stuff is kind of cathartic. So I actually enjoy it. I have something to say, get it the fuck out of my head, put it on the internet, and now it's your guys' problem to deal with. You guys read it, and then that goes and reverberates out into the world of the internet, and hopefully I can get it off my brain and go back to finishing on, you know, focusing my Guinness or whatever I'm doing. And so it's kind of been nice like that. But what I will tell you is it has also kind of been a grind, you know, like these guys, like some of the guys that we know mutually, like I was just talking to Sang Lucci a couple of weeks ago, and my brother Ryan Sellers, Open Outcrier.
Yep, I actually I interviewed Ryan 2 weeks ago, I think. Yeah, so.
Yeah, man, we all kind of came up relatively at the same time, and I mean, those guys probably have a couple more years experience than I do, but you know, we're on Twitter every day, man. You know, it's not like there's no. It's been a grind, man. I remember thinking, oh, I can't wait to get to 1,000 followers. And then I got to 1,000. I was like, wow. Then I can't wait to get to 5,000. I got to 5,000. I'm like, wow, I'm coming up on 10,000. Cool, you know. And I just stopped caring now. I'm at, you know, whatever, 60,000 something, whatever. And I'm just sometimes I look down at it and I'm like, who are these degenerates that are following me? What the hell are these people thinking? And it was the same deal with the podcast, right? So like 18 months ago, I started this podcast kind of as
great segue. You can tell you did a lot of podcasts. So give us the history of the podcast, and then maybe give me a little bit of a introduction, tell people what you're doing on the podcast. So.
Well, I don't have some big shtick and
Sure.
spiel, right? Here's what I'm doing. 18 months ago, I said to myself, man, here's some people I would like to talk to that are not getting mainstream media attention. I'd like to do that somewhere, and I'd like to have an outlet for when I'm too tired to basically blog something. I can just scream into a microphone for, an hour and then just punt that out onto the internet. And again, that's your guys' problem to deal with now once it's out there. And, it was kind of like a weird experiment. I didn't know whether or not it was going to do anything. So I just went out one day and bought all the shit to do it. And I, called up Bill Fleckenstein, who is like one of my favorite economic commentators, who gets zero time on the financial media, and who the last time I saw him on financial media was getting insulted by Tim Seymour over at CNBC, who brought him on the air, I guess, to insult him, which I thought was one of the most petulant and just overall
dick move.
odious.
Yeah.
Yeah, exactly. It's a huge dick move. And I was like, you know what I would like to do? Interview this guy and not be a total chode, because I'm interested in what he has to say. So I did. I was like, you know what? Fuck this. I'm going to start my own podcast. And I started the podcast. I called Bill Fleckenstein. I'm like, hey, sorry that guy at CNBC is a douche, and by the way, you don't know me, and, it's 11 o'clock in the morning, and I'm already drunk, but would you like to come on my podcast, And Fleckenstein was, like, super cool about it. And so he came on, we started shooting the shit with this god-awful microphone that I had when I started. And then from there, I just decided what the podcast was going to be was anything that I wanted. I don't bring people on that I don't personally find interesting.
Yep.
I don't feel, my podcast is a mixture of kind of rants, my own rants, and guests. I don't have a schedule. I don't have anything. If I got something to say, I say it. If I don't do a podcast that day. If there's somebody interesting that I want to talk to, I invite them on. They're more than welcome. If they don't want to come on, then that's fine too. So it's just basically, fun for me. And it's been awesome. I just crossed 1.5 million listens, which is just
beautiful.
Absurd. I've really only been doing it for 18 months. So again, I don't know who these people are, but I'm super stoked about that, and I'm very thankful. And the podcast now kind of funds itself with my Patreon. I have people that are supporting me financially. And I've branched out really from more than just finance. I spoke to Whitney Webb last week, who's this incredible journalist that did all this work on the Jeffrey Epstein saga. A couple weeks before that, I talked to Richard Gage, who is one of the head architects and engineers for 9/11 Truth. So any topic that interests me is what I'm going to talk about. And I know it sounds kind of selfish, but my podcast, my rules. So that's how it goes down.
And I tell, that's something I talk about all the time, whether it be with my son or on Twitter. I'm like, man, I kind of jokingly, but not jokingly say it. I mean, it's like we live in the most amazing time in history. I mean, look at you bought a $50 mic and you turned it into 1.5 million downloads. I mean, how can you not?
Yeah, it's kind of wild
about where we are in this world,
Well, it's like a really cool time to be a content creator, right?
Exactly. Yeah.
So, everybody spends all day on Twitter bitching and moaning about how awful CNBC is. And that, for the most part, is pretty much warranted, right? Like, it is an all-day fucking bull market hand job at CNBC, and, chock full of guys wearing the same fucking Izod shirt combination that they bought at Kohl's every day. I was watching it today. These two idiots on there trying to talk macro, okay? One, of course, is probably the head of strategic investments at fucking BlackRock, making $5 million a year, and the other guy was some other hotshot bigwig. And both of these guys didn't know their fucking ass from their elbow. They were getting relatively simple questions, and I'm not judging what they said. I'm judging their inability to articulate themselves and make any kind of cogent point at all. I mean, people were, asking them like, hey, like very simple macro questions. What kind of effects the trade war going to have? What do you think about interest rates going lower? I think they were talking about, are we in a recession? And it took these guys 2 minutes to double speak and back talk. And yeah, well, we are. Where the one guy was great. He's like, well, I think we're a 33% chance of getting into a recession. Now, keep in mind, 33% is only 1/3. So I'm not saying that we're going to be in a recession, and I'm not saying we're not going to be in. I'm not saying we're not going to be in a recession. I'm like, where the fuck do you find these people? So, anyways, in terms of being a content creator, it's a great time because these big, huge conglomerate corporations, whether it's CBS, CNN, CNBC, Fox, they don't have the power anymore. The creators have the power.
Oh yeah, I know you're a big fan because I see it on Twitter. I mean, it's like, Joe Rogan you add together every TV channel together, and one episode of Rogan crushes it.
Oh, I know. He murders it, and it's like hilarious. I just asked the coach from the Netflix series Last Chance U, which is like a football show on Netflix. This coach Jason Brown. I watched the series and I thought it was awesome, and I was like, you know what, this guy would be a good podcast guest. So I invited him to come on the podcast. I sent him a DM, and his he tells me, you got to talk to my publicist. And I'm like, listen, I don't want to talk to your publicist. I'm like, just fucking pick up the phone and call me and we'll do a podcast. Otherwise, just say no and go about your life and I'll go about mine. So I finally I email the guy's publicist. And the publicist doesn't get back to me. And then he's fucking jerking me around. Oh, give me a day. Give me 2 days. I'm like, look, man, we're talking about a guy picking up the phone and just talking to me for a half hour. That's it. We don't have to arrange fucking, first class flight tickets here.
Exactly.
So, so finally, like a couple days later, I send the guy an email. I'm like, what's going on? The publicist gets back to me. He starts giving me an attitude. He's like, learn how to talk to people. Because I sent him this email. I'm like, what are we doing? And then the coach sends me this message on DM on Twitter. And he's like, to be honest, you sound like kind of a slapdick, which admittedly I am.
I was going to say, if somebody said that to me, I'd be kind of like, hey, I kind of like that,
But the point here is, then he says to me, I'm on ESPN today, so I'll pass on Quote the Raven. And I was like, fine, that's no problem at all. But the reason I wanted to bring that up is because, being on ESPN isn't the end-all, be-all. First off, this guy's got about 15 minutes of fame left anyways, number one. But that's besides the point. What he's failing to understand, and I'm not saying he's got to come on my podcast or any shit like that, and I'm not butthurt or anything. I could care less. But the point is, he doesn't understand that this is the new medium, right? Exactly, and the point that you're trying to make about, Rogan's podcast is worth like something like $100 million.
Yep.
I mean, and people don't even, so, I was just having this conversation with a hedge fund manager the other day. It was like, what do you want to do in terms of media? Do you want to step it up? Do you want to do a TV show? I'm like, I want to keep doing what I'm doing because I got a long runway of growth ahead of me, and it's simple and it's easy for me to manage. But you're right. The power is in the hands of the content creators now, which is why I don't want to take credit for this, but guys that I have had on my podcast kind of regularly, Peter Schiff, Bill Fleckenstein, these kind of guys now are starting to get a little bit more coverage elsewhere. Yep. And I wouldn't be surprised if the mainstream media starts to pick it up a little bit more because they realize, that they've been complete and total dumbasses for the last however many years by trying to stick to the stupid playbook and script that everybody in the industry, brother, you, me, the people listening, are sick of. Nobody wants to fucking see. Yep. Nobody wants to fucking see Muhammad El-Arian for the fucking 68th day in a row.
Oh, nice, dude, guy. I don't know. I don't know how you do it. I mean, and I know you do it kind of to like just more to fuel your skepticism. But dude, I can't even turn on CNBC. 5 minutes, dude. I can't even do it.
Well, you have uninformed anchors, okay? You have some of the contributors on here, they know what they're talking about. The Nigerians, Guy Adami,
Yep.
guys are, sharp people. But for the most part, the news anchors don't seem to understand what they're talking about a lot of the time. So it's got to be strange for them to be reporting on, hey, this company has a debt maturity coming up, when they don't really understand what that means. You can just see the blank expression on some of their faces, and some of the shit that comes out of their mouth. Phil LeBeau, defending Elon Musk, and Wilfred Frost taking shots at short sellers because he has no clue what he's talking about. It's just a giant shit show, man. And, it may be a very small niche for me and you. Your podcast has done very well also. And there's a reason for that, man. It's because people are tired of the same script, man.
Well, and that's that's the beauty of what we're doing too. Is there's 7 billion people in the world, man. You carve out you carve out a little niche, and it's like
that's right, man.
It's like you're
that's right. Give me 0.0001% of that. And if I can monetize that, I'll be elected the next president of the United States.
Well, hey, man, awesome, man. I love that intro, and thanks. A couple things that came up, and it's funny you mentioned like interest rates and the China trade war. I'd like to pick your brain on that, but one thing I don't want to skip over is, what we're geared towards with this podcast is, we're, the new trader, okay? The guy that's like,
Sure.
He's Googling how to trade stocks. That's kind of who
Sure.
we're geared towards. So your journey, your 16-year journey of trying everything, would you recommend that to someone else? So 18-year-old Chris Irons is at the coffee shop with you right now. Would you recommend trying everything, or would you give him a different path? So
I think the ends justify the means, because certainly now looking back at what I know, I'm so thankful that I wasn't just, churned out of Dartmouth, through their economics program, or churned out of Harvard through their economics program, because I would hate to kind of be limited by this, new Keynesian umbrella that all these people kind of come out under. And there's a certain level of indoctrination, when you go to an institution like Penn or whatever, which is a fine school, but, a lot of people that get turned out of those universities come out of them believing their own bullshit,
right.
And even worse off, believing the bullshit that they're fed by the Federal Reserve, by the government, et cetera. And not saying that I would have been one of those people anyways, but I'm glad that I didn't. I'm glad that I learned the hard way. And I'm glad that I've, adopted what I believe to be a very necessary level of skepticism. So, my advice to somebody that's 18 that would want to start trading is, and I mean it dead seriously. Okay. Which is if you get yourself informed and you get a little bit of an education on how to do a little bit of research into things, don't trust anybody's judgment but your own. And just know that you are as good as anybody that's out there. Yep. And, it's been years of kind of I've got a lot of things wrong in my time as a trader, but there's also been times where, as far as a trade goes, I've stood down a $1 billion hedge fund manager. I've sat in a meeting room and argued my case against, a famous hedge fund manager who's somebody you would recognize on CNBC or in the Wall Street Journal. So I've kind of gone toe to toe, and I trust my research and I trust my intuition. Doesn't mean I'm some hard-headed fucking moron that just is like, I'm not trying to run through brick walls.
Right. I'm
open to hearing the other side of the story. But people that are just coming up, my advice, turn off the TV. Stop reading Zach's investment research. Block block Yahoo Finance on your computer, block Motley Fool on your computer, and just do your research yourself, because it's when you remove the cloak of financial jargon and all the little terminology and all the things that make the financial world seem esoteric and secretive. Underneath it, it's not. It's just a bunch of, douchey guys that hang out in Tribeca just basically jerking themselves off. I mean, and that's really all it is. And I'm confident that you, me, or anybody listening to this podcast, not only could we stand toe-to-toe with these people when it comes to investment research and making our own informed decisions, but you could probably kick their ass too as an added bonus. So, I mean, look, the point of the matter is, don't pay a fee to somebody to manage your money. I mean, unless you want to delegate, nobody is going to be as good as you will be. And
Exactly.
there's something to be said for having yourself to blame when you make a mistake and having yourself to praise when you do well. It's kind of a great feeling. And I think that's really important. I think people should embrace that.
So,
sorry, that was a very long-winded answer.
No, I love it. Because I don't think I disagree with anything. I mean, man, just that's the greatest thing of, again, back to the amazing time we live in. I mean, you have access to all the same information they do. I mean, you have a supercomputer in your pocket. You're talking to me on a supercomputer right now, that has unlimited connectivity to all the information in the world. Why would you not be the master of your own destiny?
You don't need to mail away for annual reports anymore. You know what I mean?
Yep,
and the best part is not only is all the shit available, but in my last, 10 years of, trading quips with sell-side analysts and, correcting sell-side analysts. And here's another one I love too. When news anchors email me and they're like, what does this mean? And I'm like, hey, I'd like to come on the air and talk about it. They're like, no, we don't want you on the air. Just tell me what it means. I'm like, you know what? Here's what it means. Do your fucking research yourself, all right?
Exactly.
I get anchors that call me like during the Herbalife thing. People would call me and be like, oh, what does this mean? What does this language mean in the 10K? I'm like, listen, man, you put my big fat face on CNBC and I'll come on and talk about it for as long as you'd like. Oh, no, we can't do that. You don't have a track record. You don't have any gravitas.
But just do our work for us.
I'm like, you're calling me for help. How's that? All right, that's enough gravitas right there. So the crazy thing is, not only is the stuff available, Tim, but nobody uses it.
Yep, exactly.
If you pick up an annual report, like you want to do it like your first piece of diligence on a company, open the annual report, not a quarterly. Open the annual report and read it. And an annual report is going to give you everything that you would need. You read, and I guarantee you, Tim, if I went out and read, whatever stock somebody's talking about on CNBC right now, and trust me, there's some dildo on right now going, oh, buy Home Depot, right?
Yep.
I guarantee you, if I went and read Home Depot's annual report cover to cover, I'd probably be 6 times more informed than that guy by the end of the report. That's all you have to do. It's going to tell you about the business. It's going to tell you about their objectives. It's going to tell you about the financials. It's going to give you management discussion and analysis of those financials. It's going to lay out most of the risk factors, the important ones anyway, of the business. It's going to talk about it's going to talk about the share structure. It's going to talk about the company's debt, if it has any. Report is going to give you toe-to-toe, top to bottom, cradle to grave, mostly everything you need, 95% of what you need to get started researching a company. And these guys on TV and big, huge, fancy idiots that walk around New York City in suits and go to, the Goldman Sachs building, they don't fucking read them either. So that's why me and you are, ahead of the game here a little bit, and why your listeners can be too.
So actually, one question that I wrote down while you were kind of giving your background. So you've obviously had some advanced education. We're at this kind of intersection right now. I've actually got a son that's a senior in college, and I'm really kind of, or not senior in college, senior in high school. Sorry, and I'm really kind of struggling with, the whole college thing. And you had
Sure.
some advantage, you had quite a bit of education from the sounds of it. I didn't get the whole, your whole vitae or whatever the hell it is. But, do you think, what is your opinion on the value of college? I mean, do you think that helped you with critical thinking and a lot of this stuff or not?
To be honest with you, the college programs that I didn't really relate to what I'm doing now. I mean, the exception being, my undergraduate, I did business and technical writing, which I use now. I was pretty proficient in that going into college anyway. I was always a good writer and good reader and always had good comprehension and stuff there. Graduate school was nice. I did learn some things at graduate school, mostly about, I learned kind of more abstract, leadership style things in graduate school, creating high performing teams, why the blame game isn't worthwhile. All these kind of not really academic lessons. I went to this Franciscan university and it was good. It was a very kind of well-rounded program. I wasn't doing, IRR analysis or discounted cash flow or anything there, but it was a great program. I liked it. As far as, and then I did a program through Cornell for hospitality, and then ultimately after that, finally did some continuing education at Wharton for finance and accounting. To be honest with you, 90% of what I use, probably 95% of what I use doing research is stuff that I've just learned on my own or learned from experience. So I think if you have a rudimentary understanding of mathematics, if you can do math at a 6th grade level and you have common sense, you can do it. You don't need, it's not like you need to be doing fucking advanced trigonometry to figure out equity valuation. You know what I mean? You get your share price by dividing the market cap by the number of shares outstanding. It's that simple. It's they're very basic equations, right? So you don't really need some super advanced anything. I mean, I don't even pull out a calculator, Tim. I probably use a calculator once a month.
Oh, me too. Me too. Yeah. If I'm just like you said, if I'm trying to figure out the market cap, it's it's about 4.5 million. That's good enough.
Right.
I don't need to know down to the penny.
Readily available. Between the stuff that's readily available and just the basics. So, look, everybody's going to find their own path, man. I don't want to tell people what to do and what not to do. I'm a libertarian, so I hope people do whatever suits them. But for me, I'm glad that I went and got all of this education, but I'm not sure I would be in a markedly different position now without it. But I don't know. Who knows?
Sure. And it's just, I just kind of wanted to ask that question because we get asked that a lot. I mean, it's like, hey, do I want to learn to, trade. Do I need a business degree? Do I need to do this? And it's like, man, day to day, the math I'm doing, and, again, I'm just reading annual reports. I'm reading press releases. It's not.
Well, I think the most important thing if you're learning to trade is don't get sucked into this fucking scam of technical analysis.
Yep.
There's people that think that because they learn charting and they learn, what the Chaikin money flow indicator does and what the RSI does, that they're learning, how to be a trader. And to me, if you ask me, the chops for becoming anything in the world of the capital markets are based on the fundamentals. So, if I see a stock that's undervalued on a price to earnings, basis, and they have a good secure balance sheet and they don't have a lot of debt, I'm going to buy that regardless of what the chart is doing.
Yeah, whatever Mojo Cloud says. Yeah.
Right. So people that kind of slip into this, and it's an easy scam for people to run. That's why all these stupid trading courses and stuff, that's what they teach you. I'm going to teach you three easy chart patterns that I use to make money. And it's like, yeah, but people aren't really learning anything. They're learning how to play connect the dots, which, you were doing in 3rd grade.
Sure.
It's not a big deal. Fucking charting is a backward-looking indicator. It's kind of a ridiculous way to make your investment decisions. And but it's easy to teach people. It's easier for somebody to rip you off and show you, hey, here's a pattern that you should pay attention to. It's easier to do that, Brother Tim, than it is to sit somebody down and explain to them, what the difference between a market cap and an enterprise value is, because people just don't get it, and it's just
and it takes time.
Like, hey, line.
Yep.
Don't get sucked into the scam of technical analysis. Technical analysis is not becoming an investor. You're not an investor. You're not a stock. Look, it's some people it works for. Again, I don't want to tell people what to do, but for me, that is putting the cart in front of the horse. The horse is the fundamentals. You have to learn the fundamentals first. You have to learn the fundamentals of equity valuation, and you have to learn how capital structure of companies works, which is so much easier than what it sounds like. It's the first time you ever heard the term capital structure. You're like, holy shit, what is this guy? An investment banker? No, it's like very easy. It's just basically a totem pole of, all the different classes of shares that a company can have. Some of them have higher priority, some of them have lower priority. You've got to understand how each one of them works if you want to value each slice of the company.
So I think that's a good segue. So I know that one of your recurring themes on Twitter, and I know it's kind of tongue in cheek, but not tongue in cheek, is you'll mention that new podcast out, and it's the Chronicles of Our Bullshit Economy, episode 572, which I appreciate.
Right.
I chuckle every time I see those. But so let's kind of move into some of the things I want to ask your opinion on. Again,
sure,
I'm bullish. I'm not afraid to admit it. I think again, I look at a lot of stuff going on in the economy. I think we live in a great time, and now I'm talking just specifically the markets. So I know you're very skeptical of this, this orderly climb for the last 10 years. So what, why are you so dubious of the stock market overall, the market overall and the economy, and can you kind of fill in the listener as to what's the mechanics behind your skepticism?
Look, the mechanics behind my skepticism are kind of deeper than the stock market.
Sure.
Once you understand how the economic system works in practice today, how the global economy works, how fractional reserve banking works, how the central banks work, it's very difficult to not be a skeptic.
Sure.
The problem is, I think that most people, the majority of investors that are bullish, your Siegels, your Buffetts, the guys, of course, that all have more money than I do. The problem is that their tactics and their ideas exist within a theory that we're implementing right now that we don't know how it's going to pan out, 5 years from now, 10 years from now. We're on this unprecedented journey of money printing right now. Okay. Fiat currency, we decoupled the money from gold. All right. And basically we print money so that we can spend at a deficit, monetize debt. We're promoting inflation, and nobody's really done this the way that we're doing it now. So we don't really know how it's going to end up. And anybody that tells you that, the Dow's definitely going to be at 100,000 in, 10 years or whatever, is full of shit, because people don't know. And people that have been right historically aren't always going to be right, myself included. So my skepticism comes from it comes from a much wider lens, almost a philosophical angle, which is, this is an economic system that humans have built based on rules that humans think will work for the long term, but mostly are put in place to appease us and politicians now in the short term.
Short term, yep.
And we don't have a 50-year, 100-year, 150-year outlook on the economy. We have a 50-minute, outlook on the economy. Every day the stock market goes down, we're calling for more rate cuts. It's a stupid and ridiculous way to run monetary policy. So my skepticism is based on that. I just think it's a con. I mean, if you want my honest opinion, the basic tenets of finance, the Austrian school shit, right? Save your money, because if you have more money, it's better for, capital investment going forward, and don't carry debt because you don't want to owe people money. That's a very simple concept, right?
Right.
But because
which is
we're
the
greedy,
exact opposite of what we're sold. Yeah,
Well, exactly. We're told, spending is great and take on as much debt, leverage yourself.
My favorite example is like when you see a car commercial and it's just the monthly payment. They're like, "Hey, get a brand new car for $299," and people don't even know how much the damn car costs. They're just like, I got an extra $299 laying around.
Here's the problem, Tim. The problem is that the basic rules of finance, right? The Austrian school style rules, your basic supply and demand, 101, free market, right? All of that stuff we have put on, it's like a house, right? You have this little house, and then you have a little problem. So, instead of rebuilding the foundation of the house or allowing the house to fall down and building a new one, you put a little addition onto the house. And then you put another addition onto the house. And then you put another addition onto the house the next time you have a problem. And then you have, all those first additions are decoupling the currency from gold. Then the next couple additions are QE1, then QE2, then the stimulus checks, then this, then that, then now we have this tiny little house that had the basic principles and fundamentals of economics on the fucking ground, and on top of it, we have 52 stories of additions, and the house is sitting there like a fucking giant Jenga puzzle, just waiting to fall over. Okay, and that's where we are right now. We are so many sigma deviations away from normal right now with how we're interpreting monetary policy, how we think about finance in general, how we think about economics in general. We are so far off the path, Brother Tim, that we have no clue what's going to come next. Okay, so and I'm not saying I'm permanent bearish, but I would say I'm permanently skeptical and permanently cynical. And, look, I do own stocks. I have stocks that I own and hope that they appreciate in value, but I also own a lot of gold because I do think this thing is going to go tits up at some point. And I don't know when it's going to happen. May not be in my lifetime. Who knows? People could be listening to this podcast 200 years from now and making fun of me, going, this guy, with the Dow at 19 million, I could be wrong, but I'm telling you, my man, we get into precarious financial positions and people wind up getting their ass kicked, and we wind up in 2008 scenarios because people do not take the time to think about the other side of the equation. People don't take the time to be 1% skeptical, 2% skeptical. It is full-on euphoria at all times. And by the way, if you're not full-on euphoric, Tim Seymour makes a joke at your expense on CNBC. And that's how we're conditioning. That's how the financial news networks and the mainstream and, the popular financial thinkers, that's how these guys are indoctrinating everybody. It's one of the biggest con games of all time. It's a confidence game. The confidence game comes from, the term confidence man, which comes from
con man. Yeah, yep.
You get somebody to buy into what you're saying. You earn the confidence of somebody else, and then from there, you can dupe them and pull the rug out from underneath them. And I would argue that it is probably more likely than not that the entire system, the financial system, the central banking system, monetary policy is a giant confidence game. And that's it, man. And I think that's damn good reason to be a little bit skeptical and to try to raise my voice a little bit and to amplify the voices of others that are skeptical. Because by God, Brother Tim, we have enough fucking euphoria. We have people whistling zippity-doo-dah out of their assholes on CNBC every morning when the futures are up, and it looks like somebody killed their pet dog every morning when the futures are down. We are being conditioned. We are being conditioned to think that up is good, down is bad, when that's not the case. People need to learn that they can position themselves to make money when the markets go down, and people need to learn that in a real, true free market, markets go up and they also go down.
Well, man, I tell you, I'm going to kind of bring it home here. Really appreciate this, man. Again, I met you back at Traders for a Cause, which if you're listening, this episode will probably air in a couple weeks. Traders for a Cause will be coming up. You're going to be there, right?
Oh, yeah, absolutely.
Okay. So Chris will be there if you want to meet him. Definitely check out Traders for a Cause. I'll be there again this year. So what I want to kind of wrap it up with is I love your opinion, man. You're one of the smartest guys we've had on the podcast. I love your no bullshit attitude. So, we talked a little bit doom and gloom, a little bit reality and skepticism. So say I'm out there and I'm like, whoa, this is the first time I ever heard this. I believe the CNBC line. What should I do? Do I start buying a couple $100 a month in gold? What do I do to position myself?
Well, I don't give people investment advice. I mean,
understood.
What I can tell people is that I personally like to own some gold.
Okay.
I think it's a hedge against inflation. It's a hedge against the entire financial system, gold. So I like to own gold, and I like to own physical gold in addition to my traditional, whatever, dollar-denominated horse shit, equities, bonds, whatever. Just remember, diversification doesn't mean I'm going to buy stocks and bonds that are both dollar-denominated. That's
Sure.
not diversifying, because in the event where, the dollar winds up getting smashed, which will happen eventually, you make the argument that in a hyperinflationary environment that asset prices will go way up, but you're going to want to own something that's also detached from the dollar. So whether it's commodities, whether it's gold, personally, I prefer to own gold. I gave a speech last year that's on YouTube. If you look up case learning, Chris Irons, it is, or I think his thing's called Empire Financial Research now. Whatever. Have to bother looking at it, but it was a speech about why I own gold.
Yep. So
right, and that's it. But I would encourage people to go out and make their own decisions and not listen to me. And the one piece of advice that I would listen to is that anybody that's going to square up with you and tell you that they know what you should be doing should probably be treated with skepticism. And that's why I don't like to tell people, hey, do this, do that. I say, make your own mistakes or claim your own victories, and live or die by your own sword. And, I wish everybody the best of luck. And I hope everybody comes to the realization that they can easily best many of the quote unquote, best people in the industry or whatever, by just doing their own research and having their head screwed on straight.
Yeah, I think that's the number one takeaway from this podcast, man, and I appreciate that, is be that master of your own, be the master of your own destiny. I mean, you
that's
proved
it, brother. Yep.
So you bounced all over the place. You tried everything, but it was always it was you doing that. You weren't trying to leech off someone else. I mean, obviously,
it's like life in general, man.
Yep.
You have to trust yourself. You have to be secure with yourself. I mean, that's where everything starts in your life, right? Not just with your finances, with your relationships, with your well-being, with your friendships, with how you look at, every day. You have to shore up your own kind of personal insides and get to a point where you're secure with yourself, and you're secure with your place in the world and what you know, and even more importantly, what you don't know. I mean, I tell people all the time, hey, I don't know how to do this. Hey, I'm not a great forensic accountant. Hey, I'm terrible at this, because, embrace those things that you're bad at and tell people, because people will help. Don't try to be like, hey, I know this, I know that, when you don't. And it all just comes from being secure with yourself, man. Yep. And in finance and in life, being secure with yourself and trusting yourself, I think, is going to take you, and it sounds kind of Mr. Rogers-y, but believing in yourself, it's going to take you further than turning around and handing your money to some asshole in a $5,000 suit.
Something, again, you mentioned libertarian. I mean, I think we share a lot of similar beliefs in that as well. And, she was pretty crazy, but my favorite author of all time is always Ayn Rand and the Fountainhead, Howard Roark. Sure. I mean, hopefully I don't offend you, but you remind me a lot of that like Howard Roark like type character. He was like, listen, I know what the fuck I'm doing as an architect. Don't tell me how to do it. I'm going to do it. I'm going to do it my own way. And that's why I recommend that book to so many people. It's my favorite book of all time, actually. So,
well, you can be again, you can be okay with the things that you don't know.
Yep.
There's plenty of things I don't know. I'm a terrible accountant, Tim. Terrible. I mean, when I need forensic accounting, I talk to somebody else about it. I just can't do it. I mean, I'm not great at it. There's people that can reconcile a balance sheet and a P&L, with one eye closed in 5 seconds. I'm not that guy, right? You have to recognize what you don't know, and recognize what you do know. And when you embrace when you embrace your weaknesses, and you're okay with that, that's what gives you real strength. And that is what will turn you into the rock that other people will break themselves on.
Perfect ending, man. I love it. Love it. That was I've never heard that saying. I'm totally ripping that off. So, man, again, Chris, I'd like to thank you for coming on, and definitely, the listeners out there, definitely check out the QTR podcast. And Chris, man, thanks again. And I look forward to seeing you here in a month or two, man. Thanks a lot.
Tim, it was truly my pleasure, man. Thank you so much for having me on. And if you're a listener and you made it this far, congratulations for surviving my diarrhea of the mouse. But also thank you very much for your time, and I really appreciate it.
Hi, this is Aaron, aka Double A Ron from New York City, and I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the Steady Trade podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.